Today, I'll be showing you the top 3 altcoins I'm buying in October 2023. This is a monthly top crypto series where I choose 3 altcoins which have the most significant catalyst events happening in October, which makes them primed for a big move this month. Welcome back to the VirtualBacon channel. My name is Dennis. I'm a crypto angel investor for the past 5 years, and I have invested in over 100 crypto startups. On this channel, I share my views on market trends and investing strategy to build wealth in crypto. Before we start, let's have a quick recap of last month's picks. The first altcoin in our September list was MakerDAO MKR. The reason why I liked Maker last month was because of their updated roadmap called Endgame, which includes a whole tokenomics revamp, the launch of 6 new sub-DAO tokens, and even a brand new chain. This is a 5-phase initiative that officially kicked off in September. Now, we covered Maker when it was trading around $1,100, and I did take a position in Maker right around the $1,100 mark, as it was a clear breakout from the $1,000 resistance. And today, Maker is trading at $1,500, which is up about 35%. My current outlook for Maker is still the same. Since this price consolidation between $600 and $1,000, this was a clear breakout confirmation, and we even had the retest now back at $1,000. This bounce clearly indicates that Maker is now in a new uptrend with a series of higher highs and higher lows, and we just had the latest higher low come in. So I will keep holding my Maker position as long as the $1,000 mark holds, because this indicates the uptrend will continue. Another altcoin I bought in September was Astar Network ASTR. My thesis around this was the Astar 2.0 Supernova upgrade, which did have some huge events going live in September. First, they announced a whole ZK EVM Layer 2 in partnership with Polygon. This was the major Supernova 2.0 upgrade. The other major narrative going for Astar is its position as Japan's favorite blockchain infrastructure provider. And we saw Sony announce in September that they will be building their own blockchain in partnership with Startail Labs, who is the parent company of Astar. Despite these positive news, the overall Japanese Web3 narrative did not pick up in September, and Astar's price has not made a new high, and has now even broken down into a new downtrend. It is now showing clearly lower highs and lower lows, which means the trend is now going down and price is likely to go down further. Also, since the Astar 2.0 news is now over, I'm exiting this position and will keep watching until the Japanese coin narrative becomes popular again. If you want to see previous altcoin mentions in our top crypto series, I'll leave a link for the playlist down in the description. Okay, now let's get into the first altcoin that I'm buying in October, and that is still DYDX. We have already mentioned DYDX in last month's video. However, even though I have already bought into this coin last month, I still think DYDX is one of the best bets still for October, and here's why. Number 1, my investment thesis was around the DYDX V4 upgrade, which is still in play. The upgrade did not go live yet in September. Now, this upgrade is huge as it will fundamentally change the biggest issue that have plagued the performance of the DYDX token, which is its tokenomics. In short, DYDX token holders will finally receive up to 95% of the exchange's trading revenue. At today's value, based on the trading volume of DYDX over the past year, that is worth roughly $80 million per year. And at a current market cap of $340 million, the DYDX token is heavily undervalued. This revenue sharing upgrade also has not been officially announced, but there were many leaks scattered throughout DYDX blog posts and community AMAs over the past year, which does confirm this. For example, DYDX Trading will no longer receive any of the trading fees as part of the V4 upgrade, and they have clearly outlined the distribution parameters for what the trading fees will go to after the V4 upgrade. The lack of publicity is the reason why most people still don't know of this upgrade, and this is why DYDX price hasn't been moving yet. As you can see, DYDX has been trading around the same price of $2 for the past 6 months. And this is still within my entry range below $2 because there is a clear support at $1.5, which must hold in order for the uptrend to continue. So with an entry below $2, we have a very clear and tight stop loss just below $1.5. My take profit targets for DYDX remains between $4.4 and $7. These will be the only resistance levels left after price breaks above $2.6 to confirm the major uptrend. In last month's video, I also broke down the upcoming token unlock for DYDX, which is happening on December 2nd. Long story short, I think the major hype for DYDX needs to start between October and December in order to push the price up, leading to the private investors token release. This is why I'm heavily buying DYDX right now and closely watching the DYDX V4 launch this month. But I will aim to take profit sometime in late November and early December, as this will be when the early investors will use this hype to take profit. As long as we know when the token unlock is happening, we actually have a very tight trade window that we can use to limit our risk. For more details on this DYDX trade, make sure to check out our top cryptos for September video to see a whole breakdown. Moving on, the second coin that I'm buying in October is Rollbit RLB. Rollbit is a crypto casino coin that has gathered huge attention in the past 3 to 4 months. And I first covered this coin in late June in our hidden gem portfolio video when Rollbit was just trading at 2 cents. Somehow our timing was super lucky because right after the video was published, Rollbit started all of their migration and all of their good news, and price rallied from 2 cents all the way up to 20 cents, pulling a whole 10x. During this super hyped up period, I did not talk about this coin again because in my opinion, the hype really exceeded the fundamentals in the short term. So I wanted to wait for a correction and more product releases before getting back in. And now I think the time has finally come, and here's why. The first problem I saw with Rollbit in our original video was that it was not trading on a centralized exchange or even on Ethereum. Instead, it was only trading on the Solana chain with a few limited DeFi markets. But since then, this has been completely resolved as RLB has migrated to Ethereum. And today, you can easily trade it on Uniswap just on Ethereum directly. This honestly made a huge difference, and now the coin is much more discoverable and accessible. About this coin, however, I still think Rollbit has not reached its full trading and exchange potential because it still isn't listed on any major centralized exchange. The only one here is Altbank. Since Rollbit has so much organic trading volume and social interest, it's still trading with $5 million of 24-hour volume, even just using decentralized exchanges. I think centralized exchange listings will for sure come for Rollbit. This is another point to be bullish about and to watch out for. The third and biggest bullish pointer for Rollbit is with their revenue distribution, which got a 10x boost with their latest transparency dashboard. In our original video, I covered why Rollbit was undervalued because they were generating real revenue with their casino business, and a lot of that revenue was going back into the coin and being distributed to the coin stakers. However, I actually made a mistake in the original video, which I later found out, so I was actually way underplaying how big Rollbit's revenue actually is. You see, I took these revenue numbers from Rollbit's lottery system, which was their way to distribute to the token stakers. However, after I did a bit more research, I found that the number used in the lottery was actually not casino revenue, but rather casino profits. You see here, 20% of Rollbit's casino profits are used to share prices with the lottery pool. For any business, the revenue number is just how much sales you have, whereas the profit will be much smaller and actually is how much money you are earning. This is why in my original video, I should not have called this Rollbit revenue, but instead this was actually Rollbit profits. And because I was using a price to sales ratio, which works with revenue, our original price calculation for Rollbit was actually way underpriced. Instead, I should have used a price to earnings ratio, which would have made Rollbit even more bullish. In the past month, Rollbit released a brand new upgrade to the RLB token utility, which is now being buyback and burnt with all exchange revenue. And they also released a full dashboard to outline exactly how much their revenue is. So you see here, their 24-hour casino revenue is actually $690,000. 24-hour crypto futures exchange revenue was $488,000, and 24-hour sports betting revenue was $118,000. And there are clear burning percentages here. So 10% of the casino revenue is used to buy back and burn RLB, 30% of crypto futures revenue, and 20% of sports betting revenue are going back into RLB. And notice how these numbers are the real revenue numbers instead of my original calculation, which was only about $65,000 per day. This was actually not the revenue. This was their profits per day. So with their newly released dashboard and this burn mechanism, I redid the calculation, and here is what I found. So Rollbit's casino is grossing about $500,000 in revenue per day. Timing that by 365 days gives us $182 million in casino revenue per year. Now, this casino revenue makes up about 60% of their total revenue. As we saw, they also have crypto futures revenue and sports betting. So the total revenue for them for 1 year is about $300 million, give or take. And now we can plug this number into a price to sales ratio in order to see the fair valuation for Rollbit. For this, let's look at some of the other real yield projects in crypto that give out revenue and profit share to their token holders. First, we have Lido Finance, which is generating about $575 million in revenue per year. And their price to fees ratio, which is in crypto terms, the price to sales ratio is about 2.5. Another example, we have Uniswap, which is generating $300 million revenue per year with a price to fee ratio of 14. Another real yield project that's super popular is GMX. They are generating $29 million in fees per year with a price to fees ratio of 16. So Rollbit's current price to sales ratio is about 1.32. We can get to this by taking the market cap of Rollbit, which is 400 million, and dividing it by the total revenue per year, which is 303 million. So here I took a few of the top real yield projects in crypto and compared it with Rollbit based on their price to sales ratio. Then plugging it into this comparison table, we see that Rollbit is way undervalued compared to the other real yield projects. A typical price to sales ratio for a top DeFi project in crypto ranges between 2.5 to 15. So here are the potential price estimates for Rollbit if it reaches a similar PS ratio. With a low estimate of 2.5 PS ratio, we take 2.5 times it by 300 million. That gives us $750 million in market cap for Rollbit. And remember, this is only low estimate. For our high estimate, let's just say it reaches about 12, which is still a bit lower than Uniswap, Gains Network, or GMX. 12 times 300 million gives us $3.6 billion in market cap for Rollbit. This is a very optimistic estimate. So there you have it. Rollbit is trading at $400 million today. But based on its current revenue per year and a typical price to sales ratio for evaluating similar projects, we can see that even a low estimate is $750 million. So I think Rollbit should be at least worth $750 million, which was about the valuation it had when it peaked at 20 cents. However, in a bit longer term, I think it could easily reach $1 billion, even $2 billion because price to sales ratio wise, it still wouldn't be overvalued even at $3.6 billion. Lastly, here is Rollbit's price chart. You see, after this significant uptrend, we are seeing a pretty decent correction now. And the support and resistance levels are very clearly shown on the chart. We have the level at 9.5 cents, which price bounced off of, and this was the top of the consolidation range before the previous rally. And now price is visiting this short-term resistance right around 12 cents, which was the previous peak we had back in July. And this level also acted as a significant support in the first correction wave. Personally, I'm targeting anything below this 12 cents level. As long as this absolute low that Rollbit has at 7 cents holds, I think everything is a buy right now. I want to target about an average entry right around 9.5 cents if Rollbit comes down for another bit of correction here. However, I'm already starting to scale in a bit just in case this uptrend just starts to take off. And because I know Rollbit is way undervalued based on fundamentals, I'm willing to just ignore this last bit of correction margin and hold on to this position for a bit longer term. I will most likely be holding this coin way into 2024 and target an actual market cap of $1 to $2 billion as the final exit. If you want to trade any of the altcoins mentioned in today's video, make sure to check out our exchange deals with the link in the description, or you can go on virtualbacon.com to find our latest partnered exchanges. Finally, the third altcoin that I'm buying in October is Radiant Capital with the ticker RDNT. The platform lets users borrow and lend tokens across any chain without having to switch the network. For example, you can deposit Bitcoin on Arbitrum and borrow Ethereum on Mainnet. You can do so all within the Radiant platform without having to bridge your tokens between the chains. Their goal is to consolidate the some $22 billion of fragmented liquidity across the top 10 alternative networks, so people can get the best yield on their tokens no matter where they hold it. Now, there are three main reasons I think Radiant has potential for October. Number one, Radiant will finally launch on Ethereum mainnet on October 15th. The platform currently runs on Arbitrum and BNB chain with already $500 million of total value locked, but the biggest asset pool in DeFi by far lives on Ethereum. However, the yields on Ethereum are usually lower than the other networks. This presents an arbitrage opportunity for Radiant to boost their total value locked for Ethereum mainnet users that want better yield. And because the platform is cross-chain, people can keep their tokens on mainnet but still get the better yield from Arbitrum or BNB chain. Once this mainnet launch goes live on October 15th, the TVL or total value locked for Radiant should see a significant increase. Number 2 is the Arbitrum Incentive Program. Arbitrum is just about to launch a short-term incentive program which will allocate up to $40 million worth of ARB tokens to the top DeFi projects on the network. This is the snapshot vote that just went through on September 17th, which did approve up to 50 million ARB tokens that will be allocated until January 2024. The program is almost ready to start, and the goal is to drive more users and TVL to the applications on Arbitrum by providing them an extra reward with the ARB tokens. This is not only bullish for Arbitrum itself, but is especially good for top Arbitrum projects like Radiant. You see, Radiant is already the third largest project on Arbitrum, and Uniswap doesn't really count because it lives on all chains, so technically it's second biggest. And Radiant already applied for this incentive program, which will most likely get approved and give them the tokens. They will be receiving up to 2 million ARB tokens according to this application. And these tokens will be given as rewards to the Radiant platform users, further driving their growth. To see the full effects of the Arbitrum incentive program, let's look back at the OP summer we had back in August. This is when Optimism had a similar incentive program back in summer 2022, when up to 51 million OP tokens was distributed to the OP DeFi platforms. Within this 1 month period of the Optimism incentive program, the TVL on the network grew from 300 million all the way up to 1.1 billion. And Optimism's token price also grew from 50 cents all the way up to $1.75. Now, whether this can be repeated on Arbitrum depends on the specific tokenomics of ARB itself. This program technically still adds sell pressure to the market as it unlocks new supply that's coming to the circulating supply. However, for the top DeFi platforms like Radiant that is built on top of Arbitrum, these are much safer bets because they don't have any extra inflation from their own tokens. They just get these ARB tokens for free that they can distribute to their platform users. Back in OP summer, we saw a similar price growth on Velodrome Finance, the leading decentralized exchange on Optimism. Velo's price went from 2 cents all the way up to 9, almost 10 cents, doing a 4.5x. So once the Arbitrum incentive goes live, Radiant Capital will also see a significant boost as people come in to get these ARB tokens for free and essentially become new users of Radiant, the platform. It's also worth noting that Radiant has a solid tokenomics that captures real yield from the platform's revenue. You see here, $20 million of platform fees have already been paid to Radiant lockers. This is how the real yield works. Essentially, 85% of all the platform revenue goes back to the users. 25% of it goes to the lenders and 60% goes to the dynamic liquidity providers, or in other words, the stakers of the RDNT token. Therefore, when Radiant have their expansion to Ethereum and the Arbitrum incentive program will not only boost the vanity TVL metrics of Radiant, but will also give the RDNT token directly more revenue. When the Radiant stakers get more revenue, the staking income will increase, which will directly drive up the price demand. The third and final catalyst coming to Radiant is with Layer 0's airdrop farming. Now, Layer 0 is the core technology that enables Radiant's cross-chain lending platform. In Radiant V2, they also migrated from a ERC20 token to the Layer 0 OFT or Omni-Chain Fungible Token format. This was developed from many conversations with the Layer 0 and Stargate teams. Essentially, they are very close partners. Right now, lots of people are excited about Layer 0's airdrop, which could be launching in just a couple months. There was even a ZRO token leak, which was mentioned in Layer 0's newest code commit, further driving this hype. In order to increase their chances to get the airdrop, people will continue to use the Radiant platform as it is the #1 DeFi project built on top of Layer 0, only behind Layer 0's own Stargate bridge. Similar to how GMX got super popular before the Arbitrum token was released, people are using the Radiant token as a proxy bet on the future growth of the Layer 0 project, as the ZRO token is not released yet. I'm expecting this airdrop speculation and the layer 0 hype to continue for at least a couple more months leading up to the ZRO token launch. So with these three catalysts all lined up between October to the end of this year, I think Radiant Capital is poised to make another run. Looking at the price chart of Radiant, it has also come back down after their major rally in the first half of the year. Price is currently sitting at 23 cents, which could be a really good entry level because we have a clear stop loss right at 20 cents, which is the key support level. This level dates all the way back to the launch price of Radiant, which peaked right at 20 cents. So this previous significant resistance now acts as significant support. We see this a bit clearly on this chart here. 20 cent level was tested 3 times back in February 2023, in March 2023, then in this long consolidation period in August 2023. And in September, it broke above this 20 cent level again and now is coming back down to retest it. So I think entering right around the 23 cents level is a pretty good point because we have a very clear stop loss right below these lows between 19.2 cents and 20 cents. This gives us about a 20% buffer for a stop loss. In terms of take profit levels, my first target is at 32 cents, which was the top of the previous consolidation ranges, and the 46 cents level, which were the all-time high prices. I don't think these levels will be reached just this month. Because the layer 0 airdrop is still some time away, Radiant's mainnet launch will take some time in order to gather their new TVL, and the Arbitrum incentive program will run until January 2024. So I will likely be holding this position for 3 months and target these higher levels then. Okay, that's it for today's video. If you know any other altcoins that are poised for a big move with some major catalyst events for this month, comment down below to let me know and I'll try to talk about it in our next video. Remember to subscribe to the channel and turn on notifications to not miss next month's top crypto picks. Also, follow me on X at VirtualBacon0x for a lot more unfiltered crypto alpha that don't make it to these in-depth videos. Lastly, join our free newsletter on VirtualBacon.com where we publish daily market alerts. And you can join our copy trading event on Fairdesk to directly copy my day-to-day trades. And you can even get a fat deposit bonus by using my code VirtualBacon. Thank you guys for watching and see you in the next video.